Welcome to the channel. I'm James, and today I'm going through my stock valuation methods for Meta Platforms Inc., otherwise known as Facebook. What has happened is they released earnings yesterday and the market reacted pretty poorly to them. The shares are down 25% to $239.98. They released earnings last night. I'll go through the news, and then what we'll be doing is actually going through the earnings, looking at the revenues, the profits, the free cash flow, then putting that into our discounted free cash flow model and buffer Graham intrinsic value models to give my fair value of the stock in 2022. Has the market overreacted? That's the question I'm answering today. Should you buy or sell? Then at the end of the video, we'll be looking at some technical analysis to see what you can do with this information. But this is a massive drop. As you can see, $240 a share. Down here was about 327 the day before. And if we look, this is actually taking us back to July of 2020. So this has completely wiped out all of the gains since then, went to its all-time high of 380 and is now back to, as I said, July 2020. So let's just have a look here. Well, these are the results. Earnings per share, $3.67 versus an expected $3.84. So that is down. Revenue actually beat it. 33.67 billion versus 33.4, but then they missed estimates with user numbers. Daily active users 1.9 billion versus 1.95 billion, so that's down. Monthly active users 2.91 versus 2.95, and average revenue per user $11.57 compared to $11.38. So daily users still around about 2 billion, but down. And monthly active users, I'll put myself in this category, 3 billion down. So very crazy. Let's have a look at my steps. Firstly, this is where we break everything down. So Facebook currently has a market cap of 800 million, down massively from it was probably over $1 trillion yesterday. It's now obviously taken a massive hit. The share price 245, 52-week low of 242, and the 52-week high, its all-time high of 384. Is the P ratio less than the market? Yes, it is. The reason for this is obviously with that massive price decrease, and earnings, despite their problems, were relatively good yesterday. It has a P ratio of 17.16. Market is about 26, so that is a pass. Next, we're going to have a look at the revenue. This is from 5 years ago, 55.8 billion to 117.9, and we're going to see where this comes from here. This is the segment information on revenue broken down by their different categories. We'll be looking at these two lines here. You can see we have family of apps, which is Facebook, Instagram, Messenger, WhatsApp, and other services, and Reality Labs, which is the augmented virtual reality, consumer hardware, software, and content. I'm going to say this is the Meta side. This is the 3 months ended, but we're going to be looking more specifically at the year ended. We've got 19, 20, and 21. Revenue on the family of apps was 70 billion, 84 billion, and 115 billion. And the Reality Labs revenue, 500 million, 1.1 billion, and 2.2. So up dramatically over those last few years. And the revenue is now $117 billion. And if we just go to the other part of the revenue, which is the breakdown here, this will then sort of show it at a more granular level. For the quarter, 3 months ended 2021, 33.6 billion in revenue, up from the quarter last year of 28. And as said before, 117.9 compared to 85. So revenue is looking good, but obviously this has missed targets, which is why the market has reacted poorly to it. Next, we're going to be looking at profit, 22 billion to 39.3 billion. Go back to here. How do we get profit? Well, this is revenue minus all those expenses. Expenses was 71 billion, and then this eventually gives us a profit of 39.3, and compared to last year this was 30. So profit is up as well, not necessarily a bad thing, but the market has reacted due to this. And you can see here, this is the breakdown. This is the income loss from these. Family of apps and Reality Labs, 56 billion and 10, and this is basically, you can see that the Reality Labs is losing money, made 2 billion, lost 10, whereas the family of apps, Facebook, 115 and 56. So if they didn't go to their meta switch and stay purely on Facebook right now, they would obviously be looking very good, but that's not where they want to go as a company. Can I ask for a like on the video if you enjoy it? I wouldn't like to ask, but otherwise nobody does it. So if I'd give a little reminder, maybe people will. And then it helps me get further up in the algorithms, which really helps me a lot. But that's all I ask for, so thank you very much. Next, we want to see if the shares outstanding are decreasing. Are Facebook buying back their shares? Are Meta buying back their shares? Yes, they are, 2.9 billion to 2.8. You can see here they're buying back the shares. This is 2020 versus 2021, consistently buying it back. And if we go to their share repurchases section as well, We repurchased 19 billion and 44 billion of our Class A common stock in the fourth quarter and full year of 2021. As of December 2021, we have 30 billion. So they're massively buying back shares, which is good to see. They're rewarding shareholders. And if we go to our final step, is the free cash flow increasing? Yes, it is 15.3 billion to 39.1. How do we work out free cash flow? Well, we have to go to the cash flow statement. And if we look at net cash from operations, which is this line here, for the 12 months ended on December 31st, 56.6 billion compared to 38.7 on the year 2020 versus 2021. And if we look at the quarter, 18.1 compared to 14. How do we get free cash flow? We want to take the net cash from operating activities minus capital expenditures, which is property purchases of property and equipment, 18 billion and 15 billion respectively. So that gives a free cash flow of 2021 of 39 billion compared to 2020, which was 23.6. So up massively. Am I thinking the market has overreacted right now? I would say so, because currently that is 5 passes on Facebook, no failures, and the free cash flow ratio, which is the market cap divided by the free cash flow, 22. So 22 is still pretty low. P ratio is very low, and 25.93 is the market average. So it is looking undervalued at the minute. Now we're going to look at discounted free cash flow and the Buffett-Graham intrinsic value models. This is calculating the future free cash flows of Facebook and discounted to today's value. On these ones, we have 2020 going up and considerably going up. So what does this give us a value as? Well, based on these estimates, Facebook should be worth around about $409 a share with a 69% discount. Very nice. And you can see where these are taken from. So we calculate free cash flow versus net income. We get an average rate, which we've averaged here. The average of these is 96. Then we've got the revenue growth rate. Analysts are expecting 19% in the following years. The average is about 19%. Analysts are expecting about 15%, but the average of these is 19. So let's even go a little bit more bearish here. Let's just say 19%. And then let's also look at these 2 years, because this one really does take it out of the equation. So let's just say that 2021 was a slightly better year for Facebook. We'll decrease it just a little bit. In fact, we'll decrease it slightly more to about 81%. Typo there, 81%. And even then, this is with free cash flow in 2022 being lower, it is still massively undervalued, 339. So let's just revert those changes there and look at the pure averages. And then we're looking at the Buffett-Graham intrinsic value, share price, earnings per share, growth rate. Analysts are saying 21.53% over the next 5 years. What does this give the stock price? $716 a share, 200% discount, which is very, very, very high. So overall, if we're going to average these out, fair value of around about $500 a share, 121% discount. That does seem on the high side, you would think, but then this will give us a similar market cap to Microsoft and Apple. And this is in 5 years that this is calculated for. So I think this is not a bad price at all. It does look like the market has overreacted quite a bit. Now we're going to look at the technicals on Facebook. So firstly, I'll add my moving averages. So we've got a 50-day in green, a 100-day in yellow, and a 200-day in red. And the price is all the way down here. So this is, if we take it out, I'm trying to look for a similar movement. Even at the bottom of the pandemic, this wasn't as much of a strong movement. Well, actually, if we look at the glove graph, you can see it's about the same level of movement, I would say, quite below the 200. So this is obviously massive bearish signs, but we're in pretty unprecedented. Let me just have a look back to anywhere we've seen before. Even when the price dropped here, it wasn't as quick of a movement, but still way below the 200 day. So this is definitely the largest decrease for Facebook in quite a long time. And the technicals, obviously this is a bearish signal, but if you look back, then this is pretty unprecedented move. And when Facebook has gone this low in the past, it has taken a strong move to the upside very, very soon. So this does look like a overcorrection from the market, or overreaction, sorry, from the market. Next, what we're going to do is look at the MACD. This will tell us a similar story, moving average, convergence, divergence, and there you go there. So what is the bearish sign? So you can see the price switched over here. That was your first signals. And then once this price moved, it actually MACD went up and then switched again. And if we take it on the daily level, this is one of the lowest it's been on the daily level since quite a while. Facebook has been on the positive side because the MACD and signal lines are over the zero line, which is a bullish signal. Also when the green and red, which is when the signal lines switch. So we're in the negative bearish side, which hasn't happened too often to Facebook. Even in 2020, this was a lot more of an aggressive switch according to the MACD, but we are seeing something similar. So this is a bearish sign, But if this does switch, which I imagine it will, could be your buy signal. And then what we want to look at is finally the RSI, which is the relative strength index. This is telling us if Facebook is in overbought or oversold regions. I imagine it is in oversold regions at the minute. Yes, it's actually broke below the 30 line there. And if we go back 2020 at the bottom of the pandemic, this was about as oversold as Facebook was then. So that was a very brutal time in the market, which is pretty unprecedented. We go back here, Facebook has never been this low, and this goes back to 2013 as it is right now. It once went in 2018 in that little crash, then again in 2020, and then again in 2022, which is now. So it does look like a bit of a buy. I mean, it's whenever Facebook does get this low, you would expect it to move back up. And then if we also go on the weekly, which is a slightly longer range, this one, you can see this takes us back to 2014. On the weekly, this is the lowest it's ever been. Which would you say when we look at similar things? Here it was a buy and it would have gone up. Here is a buy and it would have gone up in pretty short term. So I would say buy based on these technicals. I know the technicals are looking weak, but this is a crazy price movement and it looks like a massive overreaction. But let me know what you guys think in the comments down below. Please give a like, as I said before, and I will catch you guys next time.